Welcome everyone. We'll start our lesson one. Today lesson we'll go through our LO1 learning outcome one. As you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. So before starting our lesson, we'll discuss about the unit specification, what we're supposed to learn next few weeks, in few lessons. And first, please. So the aim of this unit is the wider business environment to enable the learner to get the concept really about, and it's a huge impact on accounting units. Consider the different form and the legal ownership, like sole trader, partnership, limited company, stakeholders, different sort of decision making, ethics in accounts, and thus and in environment, in business environment, how we can increase the trust of our stakeholders. So understand the different form of legal ownership, which we'll go discuss, today lesson our LO1. Describe the different form of legal ownership, discuss the different types of business activities, scenarios within, and analyze the business organization responsibilities, and we'll analyze the advantages and disadvantages of partnership becoming a limited company. So that will be in our discussion today. Then lesson 2 will look at external factor. Lesson 3 we look at the economics environment, and today lesson indicative content, what we supposed to be our discussion focus. We'll discuss about public and private sector organization. We discuss about primary, secondary sector. We link with the aims and objectives, stakeholders, financial, non-financial, ethics, conflict of interest with the stakeholders, organization responsibilities, and different types of business activities. The primary and secondary are sectors, like a primary sector, raw material, secondary, the manufacturing, and third sector, which is known as the service sector. Service sector is the huge, and accounting come under the service sector. That will be all in our discussion. So please, anyone, if you have any question, you can drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. So please, if you go back to, you've been given all the relevant resources. You will see the sample assignment, business environment, study material, articles. You've been given ebooks, business environment, which we uploaded. You've been given the impact of internal external environment, and then please, all the recordings available as well previously. The new recording will be updated as well end of the lessons. Okay, so LO1, learning outcome 1, as we mentioned, is about understand the different form of legal business ownership. That will be the key. As I mentioned, the aims of this unit, indicative content, what we supposed to be the keyword. Okay, let's we'll start it. We have it's working in accounts or working in any business. It's good to know all the form of business. You can start as a business. So you can start as a business as a sole trader. There is no legal requirement as long the business is legal. So you can register, not required to register in the company house. And if there is no license requirement, like selling alcohol or a corner shop, selling tobacco, cigarettes, so it's a legal license for this. But other than that, you don't need a license for this. And in this one, the problem is unlimited liability, because because the sole trader mean all the risk and reward goes to one person. But if you borrow money against your own name, if you can't afford it and the business went into the losses, your personal asset can be, the bank can claim the money from your personal asset. While in the sole trader benefit from the fewer regulations, they reduce filling the requirement, personal risk associated with the type of the business may act in incentive to the registered as a limited company. When we say limited company, is that the limited liability? Yes, so in the sole trader unlimited liability, we do self-assessment for this and fewer responsibility. When we look the sole partnership compared to the sole trader, in sole trader you have a limited capital, because you can't really expand the business because due to the limited capital. But on other hand, when we look, the partnership act 1890, and partners can be 2 to 20, and we have a written deed. It's called partnership agreement. If you don't have a written deed between partners, then partnership act says you have to share equally. So you have to share equally. So we have to be make sure. So we can look around the Partnership Act 1890 partnership. We have the partnership deeds. Really, we need to be focused, and partnership have um, it can be unlimited liability up to your, but it's slightly lesser liability up to your investment because it can be separated to the partners as the partner sharing and the agreement as well. Okay, so they have the more partner 2 to 20. They have different experience in different field. They may be good in one in marketing, one in finance, one in the management accounting, and also on. So we have to think about, these are the key responsibility which we can look around, and that's quite good to look around, these responsibilities. And in the liabilities, it can be unlimited liability up to. So due to the limited liability, the potential tax advantage, simplicity, operating as a limited company, this is one of the most popular business structure in accounts. So we can register in the company house, and it can be become LLP, limited liability partnership. Then your liability can be partnership, and there is a no limit of 20 partners in. So at least one director over the age of 16 must be appointed. The company must have the registered office in the UK. The company must comply with the government legislation, regulation, and we need to be looking at least one share must be issued at the time of the incorporation. That's which we can look at. Public limited company in parallel to its a private counterpart, we can look around PLC exist as a legal entity in their own rights, and furthermore, which we can look around the liability of the members is limited to investment and the value of its shares in the contrast, to the private limited company. The shares of the PLC can be traded as a public market, and this is often used to raise, the finance. So we can look around operating costs running PLC considerably be higher than the private companies, and the structure is generally larger enterprise. But the public limited company required £50,000 worth of investment to be registered in the company house, and they can issue shares to the public. They have limited liability but a high capital, but a lot of legal requirement. That's which we need to be look around to fulfill. That is quite crucial, which we have to look around, and that's if we don't meet these requirements, then it's very difficult to sustain in a business. So we have to think about, and we need to stay in the business longer. Only we can stay if we have because we must the limited liability into, and that's which we need to be meet the requirement. Any question there from anyone? Okay, so LLP, which we mentioned, limited liability by shares, can be registered in the company house. And then, of course, we can say, especially in accounts, it's a lot of company, they have partners, yes. So limited liability they can register, they can submit accounts to the company house. Uh, and it's required, the two designated member at all times, and the members are overall decision making and the responsibility to run day-to-day business. Okay, key points objective is to make profit owned by the partners and the minimum two designated members, and the partner have a limited liability and the member pay the tax on the personal income and the requirement file account. So the guarantee by the companies, the non-profit organization, limited liability companies are the quite simple and not profit companies. Any profit generated reinvested into the company and used to achieve the objective of the company, which is often charitable in the nature and the type of, so limited liability partnership is the legal registered entity company house. It consists two or more partners who individually are corporate entities. We can look around two types of partners. They have, the role and responsibility. Limited partnership must have at least, one general partner and one limited partner. That's, which we can that differentiate, the normal partnership and limited liability partnership. So the partners can be located any country around the world. The partnership must have the principal place, within the UK, and similar to the UK company have the registered office. General partnerships are simple. Two people work together under one, the business name, and limited liability partnership as all the partners don't have a limited liability on LP. All the members are the protected with they have a limited liability. So we can look around these, different. The term LP does not have, the file, the setup, the trading account at the company house, where the LLP have to submit, the set of accounts every year in the company house because they registered as, in other words, the company as a limited liability. The limited liability partnership, 2 years of the partners, two types of the partner. They have the responsibility. They can be a sleeping partners, like, their name is used in the partnership. That can be general partners are the responsible for managing the day-to-day business activities and focus on the running the business and liabilities. In general partner is unlimited, which means, they can held, responsible to pay the debt which are incurred by the limited partnership. Limited partners contribute a set of values in the form of the cash, another form agreed at the time of the incorporation. In return, contributing a set of amount, and they contribute. So we look this, means any debt are raised, again the partnership, they will be only lose the value they contribute at the beginning. So limited partners must not, interfere with the day-to-day running and managing the partnership. So that's, the operating procedures properly set SOPs and things, which is quite good to be done the business effectively. Okay, cooperative. Cooperative is the business organization owned by the group individual, and like, we have the co-op. Their head office is based in Manchester, incorporated or uncorporated. Example of the cooperative are the water, electricity are cooperative, uh, cooperative bank, credit union, all, these, their main purpose to be benefit of the all. Charities of the key purpose, the charity registered in the charity commission, company registered in the company house under the company at 2006. Company we earlier said LTD is the limited liability, and PLC public limited, both have the limited liabilities. And the public limited company, they issue shares to the public and the stock exchange, and all the requirements they have to meet, the companies as well as the stock exchange. Now we're looking at charity. Charity registered in the Charity Commission, the Charity Act 2011 they have to follow, and they establish charity purposes only in the High Court, charity law jurisdiction, and the purpose the charity is set to achieve and explain your governing document, and the charities, your purposes must be fall within their description of the purpose. We look the benefit, we look the your charity structure, define the governing document, legal document, create, charity, and says, that should be run, and the type of the structure you choose affect, how the charities will be operated, such as who will run it, whether it will be have a wider membership, whether it can be entered into the contract or comply with the staff, in its own name, and whether the trustee will be personally liable, what the cost does. Okay, that's really we need to be look around. There are the main, type of the charity structure, the charity incorporated organization, the charity is limited by grantee and unincorporated association, trust, you need to be choose the right structure of your charity, depending whether you need to be have a corporate structure, whether you want to be have a wider membership, the charity commission England, non, the ministerial government department and regulate, the charities in England and Wales, that's really we need to be and maintain and central registered charities. Okay, next we are moving to 1.2 is our assessment criteria. Okay, so 1.2, it discuss the different types of the business activities and the sector and operation, and we can look around the business operate. So three different sectors in the business operate: primary and secondary and tertiary. When we say primary, the raw material, the industry is worth of 1 billion each day. The secondary sector, which is more about the raw material transform into the product, which is manufacturing sector, uh, like oil discovery and then converting and selling, manufacturing, purifying, that can be the part of example. And the territory sector, which is also known as sector, that's the biggest, the sector, like in the UK economy, 61% approximate, the GDP national income is coming from. And that's, our sometimes manufacturing and the services can be two work together. And that's, like you have the product, but you also service. Okay, so a service, the type of the businesses provide the intangible, you can't see it, it can be perishable. There is a model called Servicol model, which we can use, so where are the gaps, always look, your people are qualified for meet the client's requirement. Merchandising, the business buy product and wholesale price and then sell you the retail price. This is buy and sell businesses, the profit and selling these, hire and the merchandising, sell the product. So these can be form of these the services. So manufacturing, unlikely merchandising business, the manufacturing buy product with the intention to use them in the material in making the new product, and they transform the product. So manufacturing combine the raw material, labor, and cost. So we do the costing, like the product manufacturing cost, production cost, and the variance. That's which you learn in the finance and other management costing. And hybrid business is the company that's used, classified more than one type of the business. Restaurant, for example, combine the ingredients and make the fine meal, manufacturing and sell, cold bottle wines and various others. These are all the examples of. So financial accounts, uses of financial account. So financial accounts is the accounts which we publish in the companies or is available on the public domain. And that's, like investors and lenders, they are interested to look around these accounts, and then of course, on the basis of this they can make the decision either to invest in the companies or not. The lenders, they can decide either we are lending money, so we want to check the accounts it properly and the company is worth of their asset, their liability, and the creditors who are the lenders really want to make sure, to look around the short term, the obligation and how long the company is taking to pay off. The debtors, the company really want to be, and that customer want to look around, the credit facilities and the company long-term interest in the company range of product, all, they can make various decisions based on. So user of the financial account imply they want to be being paid the fair wages. They want to see the company the growing, and they have an interest, the bonuses and salary. That's not the senior management is. So that's why they want to make sure they look the accounts, and the government want to be checked, taxes being paid appropriately or not. And in a list want to be investment in a list. They want the company is worth, company is growing, they do interviews and a lot of, the debates and analytics they publish, and the journal public interest group, form the various groups, individual, the company giving guarantees, accounting information, help, the company is financially worthwhile or not. That's also be is very, very important. We need to be look around. Okay, activities of the business is financing, investing, and operating, and that's, the cash flow which we can look around, and the operating activity which is normal day in and out business, production, sales, and delivery of the company product, as well as the collecting payment from the customer, and this could include the raw material and delivery. The investing activities, which is mean, investing in the non-current asset, building plant and equity, we can look around the cash inflows and outflows. And financing, like you can raise the cash, through issuing shares, through borrowing money, and settling the liabilities and back pay buy back shares, that's also quite crucial to be look around the company. Activities of the business include the operating activities, investing activities, and financing. And you will see here, the cash flow under each activities in this example. So net cash, we have the positive balance, cash from investing activities, how much asset and during the year proceeds. So we have the positive cash inflows. And then if we look the financing activities, so we settle the liabilities and the cash went out from the business, and the net cash flow is out in under this activity. So if we look, and plus opening balance of the at the start of the year, net cash flow, so 2,500, 10,500, that makes 13,000 minus 2.5. That's, net cash flows from these all activities. 10,500 plus opening cash at the beginning and end of the year, how much cash we have, that's really look the cash flow statement, and is very crucial statement to prepare in the company, in the company house. We can submit the accounts and the public can use, and they make the decision based on, as we discussed about various stakeholders. Anyone, any question, guys? Okay, next 1.3, organizational responsibility. They have to look around the profit, planet, and people. They have the corporate social responsibility, implies well-being, fair trade, community stakeholders, environment, economics, revenue growth, and the cost, and triple bottom line. So we have to focus on the profit, planet, and people. Triple bottom line concept is very, very important, and welfare of the society, like food banks and various other, like Unilever and various other companies doing. So you can read the company CSR report of the company, whichever you will choose. A listed employment laws, we have the Employment Right Act 1996. We have Equality Act 2010. Now is most of the law embedded into the Equality Act. National minimum wage, which is at the moment is going to be £12.25. Employment relations, at work, not discrimination, maternity, paternity leave, and the part-time workers should be treated fairly, not only the permanent employees. The listed employment laws, transfer of the undertaking, protection, employment regulation. We have Equality Act 2010, which I just mentioned in the law, is everyone equal. Agency worker regulations, they should be when they are in the flexible time hour, they are committed and they should be paid. And the Consumer Credit Act we have, and the 2006, Office of the Fair Trade, they carry on, and we not really, without looking their credit, giving credit to be, that's also is against the law. We're not supposed to be, and trading without, license arrangement is a criminal offense. Borrowing also entitled information about the amount needed to be settled, and they will be in a position to settle. And the Consumer Right Act, the consumer has we have the Sales Good Act 1979. Good need to be fit for purpose. So in the Consumer Right Act coming force, these changes, purchasing goods without the constitute unfair terms and inclusion digitally contents, and should happen, the goods are faulty, unfair terms in the contract, and what's happened, these businesses acting, and that can be protected customer, and the greater flexibility of the public enforcement. We have an ombudsman every regulator, and the late payment arrangement, Under the commercial debt, so we have the 30 days. So under the credit arrangement, 30 days after the goods are supplied, the service is completed, the 30 days after the receipt of the invoice due to pay, and after the agreed date of the payment, the Bank of England base rate at the moment is 4.75% plus 8% commercial, so you can charge the fees, and that's, other person should pay if they owe the money. Trade Description Act, what you're saying inside it should be included truthfulness about the consumer into them they paying, not false information. So unfair, the Contract Term Act, 1977, contract of limited extent to be which one party can avoid the liability through the use of clause such as disclaimer, and all these we need to be follow the law in the contract. Unfair terms, in the Consumer Act, regulations which we need to be look around the old, usage statutory instrument. We have the EU laws used to be embedded, of course, after Brexit. A lot of laws is amending in a process at the moment. Unfair term of 1970, example of unfair term that allow the traders to be unilateral change the characteristics of the goods and services without the good reasons. The term of allows the traders to be keep unreasonable amount of the money. Term aims to be taken away consumer legal rights. And then please, if you want to work towards the merit in lies the advantages and disadvantages we mentioned, sole traded partnership and limited company, and in tape of the in term of the liability, in term of the cost, in term of the legal requirement, and the matter of control, so you have to look around. So advantages, business partnership, less formal and fewer legal obligation, and ownership control the combine and get, so the businesses can be unlimited liability, limited access of the capital, potential defense, and the conflict and the taxation. And public limited companies issue shares to the public, they can raise money, they registered in the stock exchange, and they have to work in the public interest. Private limited companies, they only the private investors, so they have a less, the funding available, but the disadvantage is it can be and the lot of legal requirement, and they have the limited liability, tax efficiency, limited liabilities, and the professional status, in the company they can be. So we have to be make sure, please, and all the reference here and these useful links, to use. So today lesson we key, if we'll do recap on it, what we learned. Today we discuss about types of ownership. So we discuss sole trader 1%, all risk and reward goes to an unlimited liability, partnership 2 to 20 partners, partnership act 1890, partnership deed is very important, it's written, and if no deed is available, shared equally, doesn't matter what you invest. Okay, then we have the third company can be two types: private limited and PLC, public limited. Private can be start with £1. It's a private investor. Normally, they don't issue shares to the public, but the public limited company registered in the stock exchange, they can issue shares too. They are normally big in size of operation, and they have to do their accounts audited and submitted and transparency. That's all, come. And then we discuss about charities registered in the Charity Commission and under the Charity Act 2011, and that's, which we had a discussion. And then we discuss LLP, limited liability partnership is like a company, they can register in the company, then there is a no limit on the 20 people in the partnership, normal partnership and limited liability partnership. Okay, and then we had a discussion about, the stakeholders. Stakeholders mean anyone who has any interest in the business, or their interest can be influenced due to the decision of the company. That's, the stake mean interest, that's really we need to be look around the interest of the various stakeholders. Then we had a discussion about different stakeholders. Then we discuss about the financial accounts, provide the financial information, and we discuss about operating, financing, investing activity. That's, is quite crucial to determine, and we discuss about employment law and different legislation. That's all we discuss today lesson. And thanks for attending, and hope I will speak you during our next lesson when we'll go through LO2. Have a lovely weekend. Thank you. Bye bye. Thanks for attending.